All right. Welcome back, everyone. Another episode of Chart Talk. We're going to jump right into everything. A lot has transpired in the last couple of days. Again, over the weekend, we had some, geopolitical news with some bombings going on in Iran. We had oil gapping up over 10% going into Monday morning. They kind of subsided. We had a lot of speculation of what was going to happen with the markets, especially during the starts of new conflicts can definitely shake up the market. So most of the time when these things occur, there's sectors that you want to focus on, and there's also sectors you want to avoid. So initially, defensive sectors typically get the most benefit. Think of names like Lockheed Martin. You think of names like General Dynamics. These are stocks that are in that space. They're selling those, but missiles that are getting shot off. Stocks are obviously going to do very well due to those events. And you could see already, Lockheed Martin, LMT stock had been on quite a run leading up to this event. Same with GD and same with NOC, some of the bigger names in the defense sector, all pretty much running up into that event. So it's hard to, with the names I'm going to go over or the spaces that get the most benefit from these events, a lot of times these events are kind of already priced in, or people who kind of know what's going on can get in before. So it's not like we're rushing into LMT. GD gave us a little bit of a setup this week, but again, you're just kind of, you're kind of late to the party, or we're late to the party trying to buy, this 360 breakout goes a couple, percent or two higher, but the out is, $20 lower. So there wasn't really any of these grand slam sneak into defensive names because of what's going on. And we saw the same thing with energy. So you have, defensive sector gets a big boost at the start of these, conflicts. Energy sectors get a big boost. Commodities, think of gold and silver, get a big boost. People want to fly to, they want to get into something more safe. That's not as volatile, volatile to the market. And also even like cybersecurity names like PLTR. Things you want to avoid: airlines. A lot of those flights overseas were grounded. You want to avoid airline names. You want to avoid consumer discretionaries. You want to avoid emerging markets. Again, if you had stock in names that are, in that area, not the best place to be. And also tech. So you have some places that you want to focus on: defensive, energy, commodities, cybersecurity, and then sectors like airlines, consumer discretionaries, energy, emerging markets, and tech. So you kind of have this, seesaw back and forth of sectors to focus on, but a lot of them that you want to focus on already had these extreme run-ups that, the day of the market open after the conflict, energy sold off that day, sold off the next day, kind of pulled in. And energy has been in this massive breakout for months now, that it's hard to chase these sectors that get the benefit because they've already been running up and leading to this event, where it's hard to just get in now. Or even on the flip side, the consumer discretionary sector you want to avoid, in this bunch. And they have been very weak since the start of this year, but actually doing, quite all right. So it's kind of a, I think what the market is trying to show us is that this isn't going to be a very, long battle that's going to get drawn out, where the very clear winning sectors, energy, defensive, commodities, cybersecurity, have already gone enough of the, the boost out of the market that we're not going to see as much of an easy continuation higher, where some of the weaker ones, like consumer discretionaries that typically don't do the best during this periods, actually kind of snapping back off of support. So again, I'm not like a geopolitical expert. I'm not, trying to profit off of war, but just some context of sectors that typically benefit during those periods and sectors that typically don't. So just moving on back to the price action. Again, S&P has been in this extremely tight range for the past few months now. Really, the past, month or two, 675 was support. We have like that December 17 low, or like 670 is kind of the key support. And then 700 has been resistance in the S&P. And 650 more so has been the real key support. So again, going into these events over the weekend, just reading Twitter and reading a lot of articles, overall extreme bearish sentiment, thinking, kind of world ending, next market crash kind of thoughts. And we didn't really get that. The market opened on Monday. A little gap down, it got bought back up. Yesterday, we had that little shakeout down through that key mini pivot low of 675, and the market has bought it right back up. And then today, again, we're pushing higher. So it seems we're still in this broad, 30-point range here, with 670 being support and then 700 in the SPY being resistance, just broad flag or potential topping pattern. Now, given how tight these ranges are that the market has been in, which we typically don't see very often, again, even if we go, this is a 30-point range right here. So I'm going to go back to the April lows of last year, and we're talking about a 30-point range for the last quarter. The last 3 months of trading, the market has been trading in this equivalent daily candle, or half of this daily candle. So just this, when the kind of tariff war got called off, half of the intraday price action of the S&P has been the overall range of the last quarter. So extremely tight range. This is even the prior day before the news came out. This is a 30-point range. This is a daily candle of 30 points in the S&P. And this entire last quarter of trading is, basically the same range. So extremely tight ranges, where what I've been trying to explain this morning in the chat is I would rather, be very hands-off in this chop and just wait for this break. If or whenever we break 700 in the SPY, I'd much rather be very bullish at this time versus this low, giving it that 30 points, then getting, trying to be perfect, trying to buy through today's high a day where your upside's only, 10 points higher in this range. So this is, for me, again, we're still focusing on some swing trade ideas, but being very defensive, very light, because this chop is just so tight that it's easier to wait for the expansion of either to the upside or the downside when that time comes, because this, this tight price action cannot last forever. So again, moving on, again, Dow 30 names very much still in their broad breakout channel. Dollar was kind of ripping on some of this geopolitical news. Put call ratio, nothing to really discuss. Again, when we see, the put call ratio get up to like this 1.2 area, so when people are extremely bearish, we want to buy, and we see the put call area ratio drop to these lows when everyone's super bearish, is we want to do the opposite. Again, VIX, popping a little bit last couple of days, given what was going on. But again, nothing really alarming. We've seen a few times when the VIX gets up near 60, those have been times to really buy. Those were like major market bottoms, which again, VIX is nowhere near that. So again, if this major geopolitical event is not going to be something that's going to really shake the market up, I don't know what that new fear would be that would send the market dramatically lower. Again, it's the market climbs a wall of worry. Past couple months, extremely tight range. But if something like what happened this past weekend isn't really sending the market spiraling lower, at this point in time, I can't think of anything, that comes to mind. If you could think of something that would make this market go down, please let me know. Moving on to some sectors. Again, semis have been strong. Again, just, seems like broad flag is kind of forming here. Again, the real big name in this space that we need to see play ball for the semis to really continue has been this NVIDIA. Again, massive flag forming or massive topping pattern. Again, it's a bull flag if it breaks through these 195, 196 highs, bull flag continuation higher to 220, 230, or topping pattern breaks 170 and breakdown stage, and we see lower lows. But again, we don't want to anticipate these things. We just let the price action tell us what to expect. So semi still strong. Industrials, again, just flagging out at highs. Materials very strong, minus the little gap down yesterday, but back within this channel, which is good to see. Again, energy, like we talked about, with these mini wars going on, energy gets a big boost. But again, it's already gone on such a significant run up that it was hard for energy as a whole to just gap up and continue. It had to kind of pull back in to that relative range, and maybe we see it start to inch higher in the coming days and weeks. Now, a sector that has not been mentioned in the sectors that typically get the boost during these conflicts was telecom. So we can see very defined flag forming in the telecom space. Bought some yesterday, moving it, and some more adding today through those highs in the telecom sector. Again, there's one of the craziest telecom names, this ASTS. Again, market was very weak yesterday. Again, did kind of snap back stronger by end of day, but throughout most of the morning it was pretty weak. AS off the open was already trading, a few percent higher, down to 12% today. And again, we had that big picture alert through 88 yesterday, and it's getting that massive boost today. So again, very crazy telecom name. T-Mobile, another one, nice little earnings flag that's setting up. This little arrow. We had earnings out of the way. Very nice result, even though they didn't have the best earnings. Nice push higher, nice consolidation. So again, keep an eye on this 220 and this 225 area for a breakout. Again, this thing's been a little weak the past couple of months after the massive run up it's gone on, but starting to flag out here. So if you want to keep an eye on this for an eventual climb back to like this 260 area. So again, telecom surprisingly very strong compared to the sectors that, again, typically do well during periods of conflict. And then I think it's more of the sign that the sectors are kind of showing us for now that they're not expecting this to be a very long-winded battle, so hopefully it gets wrapped up quickly and we can get back to just normal price action. So again, a lot of sectors setting up. Again, big focus lately continues to be this healthcare and biotech space, similar to telecom. We're just seeing very nice bull flag forming. Again, this little dotted orange line is its prior all-time highs. So we're starting to see the area that was resistance. Again, if we zoom out, we can see this was resistance back in 2024. And now that resistance area, it's not going to be perfect, but it's starting to act as support. So when you see that, that's giving you that confirmation that once we get that push through highs, that's a new area of support, and we see higher highs. So we're seeing that with healthcare. Again, a little weakness in biotech's past couple of days, but again, biotech's also back at all-time highs, flagging there. So still keeping a very close eye on these sectors where, on the flip side, energy, industrials, a lot of these names have already gone up so much, it's hard to look to get into them, where we have sectors like telecom, like biotechs, like healthcare that are all flagging out, giving us a little more textbook entries. Again, on my end, swing trading wise, again, still in this Gilead, got stopped out of a decent amount through this 146, but still, chopping around, still sticking with that one. And added, again, like we mentioned, some VOX. We were talking about Amazon today through this 213. Also keeping an eye on this Cisco through 80. Might be triggered by the time we're done with this video versus this 78. So about $2 risk in this Cisco. Ideally, you want to see a retest this 88. So you're risking 2 to make 8, about 4-1 risk reward in that one. But again, we'll go over a couple names to keep an eye on. Again, for biggest semiconductor out there, NVIDIA is still flagging. Really want to just keep an eye on this 195, 196 for that breakout if it's going to continue higher. If you're in it, I need an exit. Apologies for my yawning. It's going to be a break of this 170. So if we see a break of 170 on some volume, that's going to be kind of the red flag to move on from this name and break higher, 195, 196, continuation higher. Anything in between that, it's just kind of positioning for either of those moves. But for now, just consolidating. Again, gold and silver, not really getting the love that they typically get during conflicts, kind of actually had a gap down. So the same thing with silver, gap and down again. Silver trade, in my opinion, is definitely over. Had that parabolic run up, and now it's just kind of like the slow, painful chop till you see a break 65. Gold, a little bit of a different story. Again, gold is just the leader. Gold is like the Tesla or the Apple or the Nvidia, where silver is, the Rivian equivalent, or, whatever secondary play is to the major players. So if you're trading into the commodities, gold is the safer spot if you have to. If there's a gun on my head, I'm buying gold over silver. Moving on to some other names. Again, this Tesla has not really done much. Again, we talked about consumer discretionaries not doing the best during conflicts. But for now, pulling into this 380 support, it does seem like, especially for how like tricky Tesla can be as a name to trade, probably need to see a break of this 380, a shakeout, before we see any real climb back to highs. Again, this area is kind of the last time we heard about Elon, buying back a bunch of stock. We also had a nice entry through Tesla through 360. We've gone out in that like 450 area. So really, before we expect to see any real climb higher, probably need to see a shakeout of this 380. So just keeping that on the radar. Again, chart wise, through that 500 time looks great, but just, that slow kind of painful pulling, Tesla needs to kind of shake the tree before we see any pushback higher. Again, this SMCI basing out here, we talked about this last week. Again, expect some sideways price action as it continues to find mini higher pivot lows, which it's been doing. So just keep an eye on this 34 for eventual base break. Again, AS, still keep an eye on that 40 area. Hood with a big day today. Trading nearly, 8-9% higher. Again, this name has been very weak. We've seen this very clear stage 4 breakdown. Again, talking about like NVIDIA, if NVIDIA breaks that 170 support, think of just kind of like this area, not the exact chart, but just visually, when it breaks that support, you get the, that sell-off lower that people aren't expecting, NVIDIA, I'm sorry, for Hood, when Hood was up here, 150s, everything was all good in the world for this name. People expecting it to go to 200. It's, they're back. But then once support breaks, these sell-offs do occur. So we just want to be very aware of key support, key resistance areas. And for this Hood, as it's been pulling in this clear stage 4 breakdown, we start to see this mini base starting to form in this area. So again, didn't take it. We avoid stage 4 breakdowns at all costs, but you can still see the base that was starting to form here. But again, there's still a lot of overhead resistance. So you can see, this sideways action, great result today, but it still has a long way to go for this Hood. Some other names setting up. Again, we've been talking about this LLY. Big flag forming in this like 10% range here. Again, expecting a bit of a shakeout first before we see any real move higher. So again, the breakout really is this 1100 area. But for now, we need to see a shakeout of this 975. So, keep an eye on the shakeout of this area, and then we'll get that support buyback through this like $1,000 area. So not trying to catch the bottom, not trying to, perfectly time this shakeout, but just letting that happen, letting that occur, and then waiting for the move to get back in through 1,000 to be prepared for this 1100 breakout down the road. We got this CRSP, a nice, very clear resistance area through this 60. It's been battling with some time. Again, we've had some members, buying it through 55, positioning for it. So nice little inside day versus 56 for now. But again, just keeping an eye on this big 60 area for a break and eventual run up back into these 70s and prior highs. Again, we mentioned this ASTS telecom name, pretty insane name overall. Again, if you were in the chat and you got the alert yesterday 388, it's looking very good. Most likely just keep break even stop for now as it tries to continue to retest these like 120, 130 prior all-time highs. Again, Cisco, we mentioned a few moments ago. Nice little flag here. Setting up through 80 versus 78. So $2 risk for move back to 88. Those prior all-time highs. Looks good. And last but not least, T-Mobile, TMUS. As we mentioned, just keeping on this 220, 225 area for this little earnings flag. And again, a lot of these names we talked about at the beginning of the call, the defensive names, LMT has been strong, but hard to get into up here. Same thing with GD, same thing with NOC. All these kind of wartime names have already had their run-ups, and it's kind of hard to look for these entries. Again, even, Newport Mining, again, a lot of precious metals, gapping down, FCX, just chopping around. No real massive breakouts post the events that occurred this weekend. Again, PLTR has been a little weak lately, talking about these stages. So like NVIDIA, like Apple, that are forming these massive ranges, PLTR has started to break its key support. And again, now it's bouncing back in within this range, but these are not the best signs you want to see in names that are forming these massive topping patterns at highs. So if PLTR cannot get back up and retest this 200 area in the next month or two, and it gets say a bounce to call it 180 and starts to turn back over, then you have the start of that stage 4 breakdown. And that's like what we saw with Hood. That's where this topping pattern transitions to a breakdown stage, and you get that bounce to here, and then it starts to trade lower. And that's what we don't want to see in NVIDIA. We don't want to see that in Apple. But these topping stages do occur. Again, PLTR has been on an insane run, up nearly 1,000%. So a lot of the things here are kind of pointing towards that being an occurrence if it cannot put in a new all-time high in the next month or two. Again, CrowdStrike, a lot of these cybersecurity and defensive names, it's been very weak since, pretty much since November, really taking the woodshed. So again, broadly, there's not a ton of setups out there at the moment. And again, with this market in this tight range, it is what it is. There's periods when the markets are very easy. There are periods when the times are very hard. And there's periods when there's very little setups and periods when there's a ton. Right now, it's very far and few between. Hanging out in cash has definitely been an easy spot to be in. Again, long-term wise, passive dollar cost averaging continues to work very well. So again, if you feel a little confused, just post any comments of some names you're looking at or questions you have. I'll do my best to answer them in the next video. Thank you.